Hey, what's happening, guys? Dan Dyro here with another Options and Play video update. At this point, you know what Fridays mean, right? Fridays are earnings on the radar days, options and play. So we are getting a little bit longer in the tooth for this quarter. So we're not going to have as many companies reporting. They're going to be fewer and farther between. But the ones that are reporting are mostly interesting. So doesn't it doesn't change the fact that there's going to be plenty of stuff to do. It's just you're not going to have the same breadth of names reporting, but the ones that are actually pretty interesting. So let's hop into it. So Monday morning, really, we should just go ahead and make Mondays a holiday. That's my opinion of Monday mornings. There's not a single company scheduled for Monday before the bell. Even in like the heart of earnings season, there's typically only maybe 10 to 20 at max. So Mondays are really slow when it comes to scheduled news events. So we should just skip straight over that. After the close Monday, so things will pick up a little bit. Stitch Fix is after the bell. This is a trade going out. And what I like about it are a few things. So expanding volatility, right here, 5 points, then you get like a 16, 17 point move. So expanding volatility, the last 2 quarters, it's been in a really tight consolidation down here, right? Which should theoretically lead to a pretty powerful move one way or the other coming out of it. Got some key technical levels. You got a gap. You got a big level underneath, right? So options are about 5.5. That's what they're pricing in for next week. But that would only be about a third, right, of what it moved last quarter. That's back when it was a $45 stock. So that moves 16. That means at this point it means we would lose like 60%. So lose or gain 60%. So that's probably not likely. But 5.5, there seems like there's some room there. I like a volatility strategy. So some sort of strangle probably into this one. But I think I have to do like spreads or maybe stagger expiration to get risk down a bit. Tuesday morning is DSW. So this one could be a mover. Not my favorite retail name, but it popped 7 points last quarter, and that was, by far the biggest reaction it's had to an earnings report, at least point wise, maybe not percent wise, but point wise, in years really. So you can see though that it's given all of that back, right? And now it's kind of hanging around underneath the 200A, which has been pretty big support this year, which you can see from earlier, right? Options are priced in at about $3, so 3 points, which really isn't too bad. Moved 7 last quarter. I just like the direction's kind of tough. It had a nice move higher last quarter, but the stock looks pretty tough technically. It's hanging below key support at the low of the range, gave back the entire move. If anything, maybe a speculative bullish bet just because of the strength of last quarter. But the issue falls in the options in this one, and the options only have 5 point increments, so it's either 25 or the 30 strike calls for December. And to be honest, like 30 probably too far of the money, 25 maybe a little bit too much risk. So it's kind of like just a tough setup technically, but also option wise, just because for whatever reason they don't have a lot of strikes available on this one. So I'm on the fence, leaning towards no, but if anything, maybe like a speculative bullish bet on that. After the close Tuesday, American Eagle, AEO, and small software play Pivotal, PVTL. So we actually played Pivotal last quarter, went the wrong way. We were looking at call flies, and obviously it got smashed. You can see though it's had zero bounce, basically in a nice tight consolidation for the last couple months, right at like longer term or post IPO support, right? So kind of a nice setup overall. I like that one. It seems like a pretty good candidate for straddle or strangle. Tight consolidation, moved over 7 points back in June, moved over 7 points in September, right? So it's averaged about 7 or above the two times it's reported this year. But the December contracts are only priced in at about 3. So to me, that seems like opportunity, right? Tight pattern, has a history of big moves, and options are priced in half of what it's averaged all year. So that's definitely going to be one I'm looking at. AEO, mall retailers have been mixed bag. Abercrombie was surprisingly good. You can see here, popped, but then Zoomies last night wasn't, and that's at a new 52-week low. So, I guess if you had to compare it to either of those two, American Eagle probably fall more in the Abercrombie category. And in terms of like a technical setup, it's actually pretty similar. So maybe speculative bullish bet there, especially with this recent move, right? And the stock has lost about 15% in the last couple of days. So maybe expectations have gotten low enough. Options on AEO are pricing in about 2.25, so 225. Before the bell Wednesday, there's only one small retailer, and it's Vera Bradley. I occasionally played this one on and off, not every quarter, but definitely have played it more than once. I just really don't love this setup. What I mean is you have its two closest comparable publicly traded names are Michael Kors, which is coming off kind of a Gombe report, right? And then Tapestry. So TPR is Coach and Kate Spade. So both of those got hit on earnings, both trading at 52-week lows. Vera Bradley has rolled over with them. It's sitting at longer term support around 10. So. It just seems that like the number is probably not likely to be much better than Coach or TPR or Kors. The stock has already lost a lot, so it seems like it's just the setup just isn't great. It's at support. It's gotten hit a lot. Even if they do have like a kind of like a mixed number, I mean, I just don't know what the downside is. Options are $1.75. That's what they're pricing in. But I just I can't get over the feeling that maybe the downside would be capped, just after the moves, after the move it had, in sympathy to Kors and TPR. So right now, I'm leaning more towards avoiding that one this quarter. After the close Wednesday is Tailored Brands, which is Joseph A. Bank and Men's Wearhouse. That's the combination company there. So this one actually has a pretty good history of big moves. You can see it popped about 5 points last quarter, dropped 8 points quarter before that. So a couple pretty large swings recently. Kind of in this retail pattern where you've seen, like there was a bunch of retailers that popped last quarter and rolled over. I mean, I just showed you the DSW chart, kind of similar, right? Popped and rolled over. So this one's, gave back all the gains from last quarter, sitting in a tight range, right? I'm sure you've heard me say that before. Like these patterns, they really lend themselves to like volatility strategies. They're stocks that have a history of big moves that have been in tight consolidations, and that's really what you want to see. So the straddle on Tailored Brands is pricing in about 4 points, which if you average the last 2 quarters, it would be well underneath it, right? 8 and 5. So pricing in 4, it moved 8 and 5 the last 2 quarters. I mean, like it's just one of those setups where it's just tough not to want to get involved. It has a history of big moves, tight consolidation, and options are pricing in less than what it moved the last 2 quarters. Before the open Thursday is tech name Ciena. So this one we were in last quarter and played this because it had like this really nice like setup, right? It was pushing up into this long-term resistance range and had a nice number and broke out. So caught that move. Haven't really been involved with it since, but what's nice, is that it cruised up through 30, has been kind of choppy, but it seems likely. A lot could change between now and Thursday of next week. I mean, we've seen that over the last few days, but it seems likely that it's going to go into earnings above 30, and at least above a handful of its moving averages. So, overall, like I feel like this is still a the bullish breakout, the bullish multi-year breakout still intact here. It has earnings momentum behind it, right? It has technical momentum. It broke out of 6-year resistance and it's held. So earnings momentum, technical momentum. So thinking definitely lean bullish. Uh, the issue mostly is that tech stocks near 52-week highs have been tough to get paid on in this market. So uh, I think some sort of calendar spread or longer term call spread, maybe a fly, something to lessen the near term risk in favor of a longer term swing. It's because it seems like it wants to work its way higher, but near term, I mean, it might be a little bit more challenging to get paid immediately. So thinking bullish bias, but some sort of strategy lessening like near term expensive option risk. Uh, Options are priced in at 3 points on that, by the way. I didn't say that before. It's 3 points on Sienna, so just about 10%. All right. After the close Thursday, Costco. Okay, Costco and actually possibly Adobe, but Adobe hasn't confirmed yet, so let's skip that for now. Costco reports monthly comps, so I don't always love playing the earnings because a lot of times uncertainty is removed just because they give monthly comp and sales updates. What's interesting though is that they had a pretty impressive comp run in the 3 months leading up to October earnings, right? And then they had a little bit weaker report and think got smashed down to the 100-day. So had a few months of good comps, and I don't know. I'm wondering if there's like a similar pattern here. Like the good comp numbers, but traders are worried about margins, and if their margins aren't strong, I wonder if it rolls over again. So options are looking for about 10 points. I guess thinking maybe a repeat of last quarter, so some sort of bearish bet into this one. Maybe like a spread or a butterfly, target a move down to retest this 220 to 215 area, 220 to 217 area. That's what I'm thinking. And that's it, actually, as a matter of fact, because there's not a single company scheduled for Friday morning, so that'll wrap up the earnings week. So you can see, not as many companies scheduled, but the ones that are scheduled are interesting. So still things to look forward to, and as we get into the holiday season, it will be fewer and far between, but there are names you can expect to move, and then clearly once the calendar rolls over to 2019, we'll get all of the holiday sales updates. We'll get the JP Morgan conference, and earnings season will start before you know it. So a lot to look forward to on the radar. So I hope you guys have a fantastic weekend, and I will talk to you all on Monday.